This is Greg Michaelowski, and this is a New York Technical Review for FX Street. Needless to say, most of the action today has been in the yen and the yen crosses, and as a result of the intervention that took place last night, this forced the market up off of a support line here and off of the low levels that we've seen in the dollar versus yen over the last few days, and moved the market through this trend line, which had a number of different points along that line, and broke through that trend line around the, let's see here, 84.49 level. The market also went through the 84.80 level, which is a horizontal line here, and that significance comes back to November 27th when the market first moved down sharply to the downside, left this big huge tail, moved sharply to the upside. It wasn't until the month of August that the market came back down to that level, broke through it, moved a little bit higher, and then spent most of September up until today moving below that line, moving lower. So the intervention has pushed this market back to the in this direction to the bullish side, and we do have the next target being this 85.88 level. That was a high at the end of August. Additional resistance will come at the high in the middle of August at around the 86.35 level. Longer term, 38.2% retracement of this move to the downside comes in at 87.52. That can't be ruled out, nor can a test of the 100-day moving average. That's a blue line in the chart at the 88.43 level. That's on the longer term basis. In order to keep that bullish bias, stay above the 84.80 level off this daily chart. Taking a look at the hourly chart, you can see the sharp move to the upside took the price above the 100 and 200 bar moving average and through the Fibonacci levels. But I really want to focus on this 5-minute chart a little bit more, and you can see the action here. We kind of have this C formation here forming. We had one test of the 100 bar moving average. That's this blue line in this chart, and the market was able to bounce off that level to new highs. But over the last 5 or so hours, the market has been very non-trending in a very narrow trading range. Of course, we did have comments from Japanese officials saying that they would be back in to intervene if the value of the yen gets too strong. The market starts to move back down. So the market's going to be cautious. It's going to be waiting for some sort of intervention, and certainly on dips, we're going to see buyers. Now, uh, the key level still remains at 84.80 level in my mind. And today we saw the market move above 80, came down to that level and started to move up. So not only do we have that support from the daily chart that I showed you just a second ago, but also support off of this 5-minute chart as far as the intraday activity that went on here today. So look for any sort of dip to find buyers, maybe even before that level at the 85 level and the 84.80 level on the dollar versus yen. If the market is able to hold this 100 bar moving average and move higher, we get through this high right here, and we got more room to the upside here for the dollar versus yen. Let's head into the euro versus US dollar, and we've seen nice moves to the upside of our Monday and Tuesday of this week that took the price above the 100-day moving average and away from the 100-day moving average. We also were able to break away from this non-trending range that has been dominating the market over the last month of trading. This range, the high to low range, was the most narrow trading range that we've seen in that currency pair for going back to mid-year 2007, July of 2007. This range has been the most narrow since that time, and so we did see an extension yesterday that is taking that out of out of the distinction. We still could have further room to the upside to go, but we're going to have to get through the 61 points. 8% retracement of this move down from this high to the low. That level comes in at 130.47, 48. Today the high I think reached 30. Let's see right here, it's reached 36, so about 11 or 12 pips short of that. Found those sellers coming in, taking some profit against that 61.8% retracement off of the 5-minute chart. We are seeing a lot of up and down action here after making the break to the upside. The market was disappointed in the fact that we were able to only move above the high from yesterday by 4 pips from 32 to 36. That led to a sharp correction back to the downside where it stopped near the 100 and 200 bar moving average, and then moved a little bit higher, and now we're coming back down toward the 100 bar moving average on the 5-minute chart. So, the market is going to have a decision to make here around the 50% retracement of near this 100 bar moving average on the 5-minute chart. And also we have this trend line here that came in here connecting these points. The market was able to, has been up and above and below those two levels, but since that dissects this 50% and dissects 100 bar moving average on the 5-minute chart, that'll be a level that we're going to be watching as for support for the euro as we head into the new trading day. The sterling versus US dollar has had a little bit better day. We went up and tested the 50% retracement of this move from the high to the low here. That 50% came in at the 156.44 level. I think we made it up to about 50, 52, actually 51 for the sterling versus US dollar before starting to come down off the hourly chart. You can see here how the market has been more or less pretty bid here. In fact, the 5-minute chart, since the lows came in, and since getting back above the 100 and 200 bar moving average here, we have been more supportive here in the sterling versus US dollar. I'm going to point out this trend line here that kind of dissects between this top part of the line and the bottom part of the line. Note this is is extended from the lows that we saw yesterday and connecting. When the market moved below that level, the market fell a little bit and then went up and tested that level here today, the underside of that trend line at this point right here, at this point right here, at this point right here. When we broke through this level right here, note how we used it as a support and then moved sharply to the upside. Now we're coming back down, testing under the old trend line again at the 156.12 level of the market. If the market should break below this level, then look for a move back down toward the 100 bar moving average in the 5-minute chart, 155.80, 85 in that in the sterling versus US dollar. A further correction could see that pair come down to this 38.2% retracement at 155.35. Also corresponds with the 100 bar moving average on this 5-minute chart. So we're at a key support level here for the sterling versus US dollar. The dollar versus Swiss franc. The important chart here is again off the 5-minute chart, and you can see why we've been above and testing the upside channel, downside a number of times. Well, 1, 2, 3, 4, 5, 6, and then the market has been leaning more to the downside here. This trend line comes in at par 22, break through this level, and we should see the market head down toward the par level. And it has a decision to make. Needless to say, the parity level in the dollar Swiss is going to bring about more interest. But right now we are maintaining ourselves above that line here. Very quiet trading here. And if we see this level hold, it might be time for the market to move above these highs and move back up and test the upper boundary of this this channel here. That upper boundary, let's see, comes in around the par 63, 64 level. That will also correspond with this 38.2% retracement, 64 level of this move down from the high on September 10th down to the low of September 14th. Basically, the high to low trading range for the dollar Swiss this month. Again, that comes in at par 63, 64, and that would be the target. If this support level can hold, and it seems like a low risk trading opportunity for traders to come in and buy against that level. So that takes care of the four major currency pairs. We'll go into some of the commodity currency pairs here next. The dollar versus Canada has a nice defined lower boundary here. We tested a number of different points. We broke below that level, failed, and then started and moved back up to the upside. Where do we stop? We stopped along the 100-hour moving average here. We're trading right in between that 100-hour moving average at par 03. 103 even, and the 102.30 level on the downside. The market trading at 80. So we have, if we're able to break above the 100-hour moving average, we should see a rotation back up to the upside, probably toward this trend line here and the 200. And that 200 bar moving average is hiding underneath there. That comes in at the 103.51 level. That would be our next target on the top side, breaking through the 100-hour moving average again at 103.01 level. Taking a look at the Aussie versus US dollar. Off of the well, let's take a look at the daily chart. The daily chart, we went and made new highs yesterday. We had the old highs about between 88 and the 88 and 05 level. Currently, the price is trading right at the 84 level. If the market is able to move below that 84 level or 88 level, we should see the market further sell off or see some further pressure to the downside. I will say that off of this hourly chart here and off of this trend line off the lows here, we did dip a little bit below there, but since that time and since the last 6 or so hours, the market's been able to find support. In the last hour, we went down, tested that trend line once again, and was able to bounce back up. So get above the 88 level, and things are looking a little bit more positive for the Australia versus the US dollar. And tonight at 5 p.m. we also have the Reserve Bank of New Zealand official cash rate interest rate decision. They are expected to keep their rates unchanged, although they have warned that or commented that the rate remains accommodative here for New Zealand. Nevertheless, the slower growth perhaps may keep them on hold. We are looking to be trading somewhere around the 100-hour moving average, and also along this trend line here. That 100-hour moving average comes in at 73.03. If the market moves below that level, look for a further sell-off back down toward this 200-hour moving average. If the market is able to hold that level and bounce and move higher, I wouldn't be surprised if we go out and take out this high right here at 90, 73, 91, 92 level. So that takes care of all the major currency pairs. And to take a look at some of our commodity currency pairs, this is Greg Michalowski with a New York technical review for FX Street. Have a great day.